Coming up on Market to Market, the president pardons 2 ranchers at the middle of a 2016 standoff, setting course on giving up the city life for a return to the family farm, and market analysis with Ted Seifried next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, July 13 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. This week, tension was evident on Capitol Hill, Wall Street, and in rural America. Wholesale prices rose 0.3% in June, but the 12-month gain was the fastest in more than 6 years, leading some economists to point out increased inflationary pressures. And the price consumers pay rose year over year at the fastest pace in more than 6 years. The Labor Department said more expensive gas, car insurance, and rent were all factors. The U.S. is looking to reclaim the title of world's top oil producer for the first time since the 1970s. The Energy Information Administration says American output is on track to leapfrog both Saudi Arabia and Russia. Much of the new domestic energy exploration is in the western United States, where land rights can be contentious. This week, those on one side of the ongoing issue breathed a sigh of relief following an executive action. Josh Bittner has our story.
The wheels are down!
This week, President Trump pardoned 2 Oregon ranchers at the center of a 40-day standoff with authorities in 2016.
Trump has, as far as I know, been responsible for the buck stops here stamp. God bless him.
Dwight and Stephen Hammond were convicted in 2012 of arson on public land after years of disputes over federal land management. And while the federal crime carries a mandatory minimum 5-year sentence, a sympathetic judge handed down a lenient 90-day jail stint for the father-son duo just before retiring from the bench. Plaintiffs argued a prescribed burn got out of control, while prosecutors alleged a poaching cover-up. The Obama administration appealed, won, and the Hammonds were resentenced under the anti-terrorism statute in October 2015. Sparking another firestorm as soon after, a group of self-proclaimed militiamen seized the Malheur National Wildlife Refuge in Harney County, Oregon, in protest.
You know, I'm just kind of upset that Bundy and his group didn't listen to the majority of the people when we said go home.
Disavowed by locals and the Hammonds themselves, the occupation was led by Ammon Bundy, son of Nevada rancher Cliven Bundy, who also was involved in a separate 2014 standoff over unpaid federal grazing fees. The Oregon standoff ended in arrests and 1 casualty at the hands of local authorities.
On at least 2 occasions, Finicum reaches his right hand toward a pocket on the left inside portion of his jacket. He did have a loaded 9mm semi-automatic handgun in that pocket. At this time, OSP troopers shot Finicum.
The Hammonds' presidential pardon was praised by family members, some local officials, and a collection of agricultural organizations like the American Farm Bureau Federation, who added, "President Trump's pardon tells us there is still hope for justice in environmental law enforcement. The Hammonds were thrown into prison for nothing more than burning an invasive species that threatened their ranch, a standard ranching practice that is both lawful and widely accepted." Conservation groups and legal advocates argued a commuted sentence would have been more appropriate, and pardons play to Trump's base. On Twitter, former Oregon U.S. Attorney Dwight Holton described the freed men as Arsonists who stole from U.S. taxpayers for years and years, and who resisted years of efforts by authorities to obtain compliance with the law by non-criminal enforcement. The use of pardon power for such nakedly political goals is very dangerous. A lawyer for the Hammonds said post-release, the family remains focused on restoring grazing rights on land overseen by the Federal Bureau of Land Management.
There's no way we can thank everybody enough and know who is the last one that tipped the scales, but the last one that tipped the scales can't be fully appreciated without appreciating everybody before him.
For Market to Market, I'm Josh Bittner.
Following the Civil War, the Homestead Act opened the door to full Western migration. And after the expansion, agriculture remained the occupation in Kansas until the 1920s. Thousands are still involved in living off the land and have been for generations. While some have left, others are returning to serve as a conduit from the past to the future. John Torpy begins a multi-part look at one family leaving dense neighborhoods for wide open spaces.
Across the rural landscape of the United States, the number of people making small towns their home has been shrinking in recent years. An aging population, along with technological advances in agriculture, have contributed to the decline of the family farm as we know it. According to the USDA, the average age of a U.S. farmer is 68. Many of those who have spent a lifetime working the land are retiring without anyone in place to step up and fill the void. On a sprawling farm in central Kansas, one family is working to buck that trend, trading in a comfortable urban life for a rural one that promises hard work, long days, and a chance to grow a life steeped in long-standing traditions. Joni Embry Minders grew up outside a small rural town in central Kansas, where her family has been farming for 3 generations. After graduating high school in 1997, Joni set her sights on a life closer to the city. After earning a dental hygienist degree, she spent the better part of 2 decades working and raising 3 children with her husband Zach in Des Moines, Iowa. Visits back to the farm brought on a sense of fondness for rural life and the many lessons she learned as a child.
We both have farming backgrounds, and we have always wanted to raise our kids in the same environment that we were raised.
During trips back home, the future of the farm became a frequent conversation. Embry Minders' grandfather, John Young, is 88 years old. Her Uncle Greg and Father Alan are closer to retirement age, and the next generation to run the farm was nowhere in sight.
When we went back for Christmas this last year, my grandpa said, it's time for somebody to come in and help, and it's got to be you.
Embry Minders is now embarking on a journey to work alongside her grandfather, her father, and her uncle. The trip home goes beyond helping the generation that came before. It's also about training the next generation that she brings with her. Embry Minders' son, Colby, has always shown a strong interest in farming. Her plan is to be the conduit for his future on the farm.
That's my happy place down there, and it's really cool because, you know, we're going to be around family that we haven't been around lately. I just kind of expect that we're gonna get this done, and we're gonna be happy down there.
That's on the guides on the sickle.
When Joni's grandfather started farming 60 years ago, the home place was a mere fraction of what it is today. The farm is now a mixed crop and livestock operation with around 150 head of cattle and roughly 3,000 acres of row crops.
I had a really burning desire to farm, but I didn't have much of a start there. The equipment back in that time, this was after World War II, was old and decrepit, and the finances were about the same way. You know, it was very difficult for a poor boy that didn't have any money to buy land, and the competition to rent ground, as it always is, was very intense. So it was a slow process to put it together.
That slow process would involve the help of Young's 2 sons, Alan and Greg, who have worked with their dad as partners since the operation was put into a trust just over 2 decades ago. Coming back to the farm has presented a long list of challenges. Both Joni and Zach are leaving successful careers in Des Moines, and their children are being uprooted from an established routine.
Them making that decision helped us make that decision to move forward. So, and this, like Joni said before, it's really for the kids. So if that opportunity is what they want to be able to do, which Colby, that's his main focus. So if that's what they want to do, at least that opportunity is there for them when they get older.
So what do you think them are, about 7/16?
Once on the farm, the couple faces a steep learning curve, catching up on how farming has changed in recent years.
It's definitely overwhelming. Just thinking about the fact that I have to learn to do what my grandpa does, who's been doing it for his entire life, is scary.
A little bit different. You're talking, it's been, pushing almost 17 to 18 years since I was actually working on a farm. So it's been a while. So there's a lot of things you got to remember, and sometimes it's the simplest things you got to remember you don't remember. So, but it's coming back, and it's an enjoyable process.
This life-changing journey for the Minders is grounded in values taught through a rural upbringing.
All I can do is to give them an opportunity. I can't guarantee their success, so it'll be up to them. And you have to like this business, or be crazy, one or the other. But if you like it, you're going to make that last trip to take care of livestock at night and the first one in the morning. And you're going to stay out there to harvest the crop when the lightning's flashing, and it might rain and ruin the crop that night. And all those things go with it.
The future for the young farmers involves building on that base to create a place for their children, as well as keeping the family operation alive.
There's the kids, but then there's my grandpa and that whole aspect, and that's why we're going back to it, so that we can hopefully make it continue to be everything that he built and wanted it to be.
Next, the Market-to-Market Report.
More tariffs, USDA reports, and favorable weather all squeezed the commodity markets. For the week, September wheat declined 18 cents while the nearby corn contract fell 19 cents. China's spending spree on Brazilian soybeans pressed the soy complex to another losing week. The August soybean contract plummeted 59 cents, a 22% drop since Memorial Day weekend. August meal dropped $12.10 per ton. A bright spot in the softs as December cotton improved $3.39 per hundredweight. Over in the dairy parlor, July Class 3 milk futures gained a nickel. A sell-off in the livestock sector as the August cattle contract weakened $1.83. August feeders declined $1.47, and the August lean hog contract shed $5.28. In the currency markets, the U.S. dollar index increased 73 ticks. Crude oil was off by $2.79 per barrel. COMEX gold deteriorated $14.60 per ounce. And the Goldman Sachs Commodity Index diminished nearly 15 points to settle at 465.95. Joining us now to offer insight on these and other trends is one of our regular market analysts, Ted Seifert. Ted, welcome back.
Hey, Delaney, happy Friday the 13th.
Oh, all right, Ted, starting off with that. Let's start actually with a social media question. Okay. Paul in Wisconsin, Columbus, Wisconsin said, could China reduce U.S. Treasury holdings, thus devaluing our dollar, making the tariff ineffective for their end users?
Yeah. Hi, Paul. That's a great question. We're not just looking at that for tariffs. We're actually watching that very closely for bond futures. Yes, that is something that they can do. They have a very large Treasury bond holding, so they have a lot of tools that they can use. That would be very shady. The World Trade Organization would probably have a big problem with that. But it's not clear whether they care or whether they intend to use that or not. But we are monitoring bonds very closely for that exact situation.
All right. Let's move on here and talk about the wheat markets. We've seen, or we're going to see, lower production in the UK, the EU, potentially lower production here in the US with harvest going on right now. What does that mean for production, both domestically and worldwide?
Well, you just said it. I mean, we just saw a USDA report that's cutting production in many different areas. So the question really is, lower production in the U.S., lower production in the EU, lower production in Australia, lower production in the Ukraine. They're not huge cuts by any means, but how many problems do we have to the global balance sheet get stronger again? And we've been talking a lot about China and how they hold more than half of the U.S. or the world stocks of wheat. So you take that out of the equation, and you've got relatively tight wheat stocks to what we've seen the last few years. So lower prices have kind of been the cure for lower prices, but now it's a question of what can the row crops do, because they might be the anchor for wheat.
Okay, let's move on, because we had a big report come out this week, and I know we want to make sure to get to touching on that with WASDE coming out this week. Let's talk about corn here. We raised exports for old and new crop corn. Why? How?
Why? Well, okay, so for old crop corn, we raised exports because exports have been great, and there's a lot of outstanding sales. Shipments have been solid. It looks like that's going to go out the door, so we're excited about that, happy to see it. That's a big reflection of what happened with Argentina and then Brazil's second season corn. As far as new crop is concerned, we raised that number, one, because prices are low, two, because Brazil got lowered another 2.2 million metric tons. So the Brazil safrinate corn crop was really quite poor for them. They were expected at 96. They ended up at 82 or 83 and a half, which has a big bearing on the first half of the marketing year for corn exports next year. Now, I'm very curious to see what happens going forward with corn exports, because what the USDA has not done yet is touch anything with the Ukraine. The Ukraine, they're still at 30 million metric tons, but their acreage number that they're using is likely well too high. Everything that we're hearing from the Ukraine with the issues that they had with hot and dry, that yield could be quite a bit lower. So I think that Ukraine number is going to be lower. I think we're going to see more exports added to our new crop balance sheet. And I wouldn't be surprised if, instead of being 200 million bushels below last year, or this current marketing year, as the USDA started out, I think we're going to be close to, or maybe slightly above, last year's export figure, which would be really good for the balance sheet.
Will we continue to see carryover numbers cut as well?
Okay, so that brings us to the question of yield. Part of the reason why the market hasn't really done jumping jacks of about a 5.5 or 1.55 billion bushel carryover is because the market doesn't really believe the yield is at a 174. We've priced something in quite a bit higher than that. But here's the thing, if you keep adding to exports like I think we could, and maybe should, that allows cushion for upper or higher yield potential. So on my balance sheet, I'm comfortable with a 177 national average yield, still staying between a 1.5 and a 1.6 billion bushel carryover. This is a really bullish story for corn longer term. The problem is right now we're not paying so much attention to fundamentals. We're worried about yield. We're worried about all of the global issues that we have right now. And a lot of times markets will get kind of out of whack with fundamentals because they've got other things going on. We're watching money flow, or we're watching tariff talk, geopolitical issues. But ultimately, in the end, the fundamentals will win out. And again, longer term, I think corn has a really good story. And when we figure that out, you can see a pretty nice run in corn, hopefully.
With all that being said, why are we seeing, we just put in a December low here over the week. What was it? I think 333, 336, something like that. Why are we continuing to break new lows? Yeah, fear, uncertainty, concern, pressure on soybeans, Again, when we have a set of fundamentals that, say one thing to guys like me and to people that really pay attention to balance sheets, that might not mean a lot to people that pay attention to charts and pay attention to global issues and things like that. That's going to get traded first, but eventually the fundamentals will win out. And I see the fundamentals for corn being really quite friendly. Okay. Ted, let's move on and talk about soybeans. Were there any big surprises to you this week when you looked at the WASDE report? Yeah, I mean, it's surprising that the USDA ripped the Band-Aid off on China. They had said that they were going to make sweeping changes on their balance sheet if the tariffs had gone into effect, and they did. So we were expecting changes. We didn't know exactly what the USDA would do, whether they were going to start with the stair-step process, which they take sometimes, or if they were going to just go after it. What we saw on Thursday was them just going after it. And I really like the changes that they made. I like the fact that they have Chinese demand down 5 million metric tons. They have exports down 8 million metric tons from where they started, and it's actually a 2 million metric ton drop from last year. There are not a lot of people that thought that that could be possible. So the fact that the USDA went and did that, I think, is great, because honestly, I think that's what will happen. And that translates into a 250 million bushel loss in our exports and a 580 million bushel carryover, which it's a big carryover number. It's not the biggest we've ever seen. It's certainly not the biggest we've ever projected.
And I don't think it really justifies the lower prices that we have right now. But as we were talking about in corn, fear, uncertainty, these sorts of things, they're dominating the market at the moment. The concern that we have is longer term with soybeans. If we don't get this trade issue fixed in the next year or two, China's going to start building infrastructure other places and start sourcing beans from somewhere else. That'll have a long-term negative impact on our soybean market and our market share. So that's the bigger problem. I think that's kind of what we're concerning with ourselves with. Also the idea that if we end up with a 50 or 51 national average yield, that 580 million bushel could turn into 700 or 800 million bushel.
Did you say this year?
What's that?
Did you say this year?
For which part?
For China building infrastructure and other parts.
Oh no, see that all takes time.
Okay.
Right, so I mean if we get trade tariffs, if we get the tariff situation or the trade war situation fixed in the next 9 to 18 months, I think we're okay. But anything beyond that, China's going to start throwing resources at developing Africa, further developing South America, developing the Chinese-Russian border. They have a lot of opportunities to do something like that, and we're just kind of encouraging them to do that the longer this goes on.
Is that part of the reason you think the USDA did lower exports to China? I mean, can they physically support themselves with not bringing in, U.S. soybeans or other soybeans?
Well, yes. Look, what the USDA did is they lowered their exports by a healthy amount, 8 million metric tons, but they're still the biggest importer of soybeans in the world. Basically, the USDA figured that the tariffs or the higher prices, the self-inflicted higher prices, would have an effect on their demand. And I think that is very much the case. But that is not reflecting the idea of China going and starting to build infrastructure in other places and help grow other sources of soybeans. That's just showing that China is going to try to lean towards Brazil, cut their demand back a little bit. They're still going to have to import soybeans from us, but at a clip of 250 million bushel less.
Okay, let's move on here and talk livestock. Let's talk feeders first. We're seeing a 150 right now for resistance level. What's the next level of resistance that you're looking to break through in feeder cattle?
Well, if you're bullish feeder cattle, I suppose. Yeah, the 156 back from the March time frame is that big target to the upside. Whether we get there or not, I'm not sure. The chart certainly looks good, so I don't doubt it. But fundamentally, do we really have the reason to or not? I don't know. That'll prove itself out if we can continue to see cattle follow along with it or not.
When we look at the live cattle side of things, why are we seeing cash basis narrow in live cattle?
Well, it's actually really kind of hard to tell if we did that or not this week because we had such, at least up until noon or 1 o'clock on Friday, we really didn't have a whole lot of cash trade this week, although it was kind of indicating that if we did, it would have been a couple dollars lower. So, yeah, that would suggest that cash is coming in a little bit. We've needed to. It's been widespread. We've been expecting cash to come down, so futures had earlier in the week kind of led the way to try to see if, outpace cash or get in front of it. But then we didn't really have a whole lot of cash trade. So I think we'll see more about that next week.
Okay. When we look at pork and cattle, time after time analysts say pork is not a substitute for beef.
Right.
But with the tariffs going on right now, does that play an impact in the cattle markets?
It absolutely could. We're going to have a lot of pork to basically digest domestically because we're going to lose a fair amount of exports. We know we're losing exports to China with a 60% tariff there. We know we're going to be losing exports to Mexico. If we're not now, we will be doing it at some point. So we're going to have a lot of pork. But I don't know. I really do believe that the American consumer has a taste for beef. I don't think we're going to see a sharp drop in our beef demand. But it could cut into it a little bit, and that is a concern.
Okay. With all of that being said, has the market priced in a drop in exports for the hog markets?
Yes and no. I mean, mostly yes. I mean, the Chinese market, we have definitely priced that in at this point. And the Mexican tariff, I think we've priced most of that in. However, there's an import quota that Mexico has of 350,000 metric tons, which is basically their needs between now and the end of the calendar year. So they can still import pork from us tariff-free at the moment. So when that kicks off, if they don't extend that, then we'll have to deal with that all over again. But at least for now, I think we're still trading at a pretty solid discount, about $11 or $12 discount to cash, which is more than usual this time of year. So I think for the moment, we have maybe found a little bit of a bottom. And I think hogs can kind of stabilize a little bit.
All right. Ted Seifert, thank you so much.
Pleasure's mine, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. When our producers travel, we take you along for the trip. This week on our Instagram feed, we published images from our work in North Carolina. Give us a follow at IPTV Market. Join us again next week when we look at one Nebraska town's efforts to create incentives for better housing. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.